Let's go. Welcome, welcome, welcome. Happy Wednesday. The good news is it's a Forex trading day. So, welcome to Forex.Today. Let me remind you that trading's risky and wonderful. Your past performance, good or bad, is not indicative of future results. So it's not you, it's the market, baby. But still, please stay small, stay humble, focus on the long term, and never risk money cannot afford to lose. Ni hao ma. How you doing? Nice to see you. Today we're going to cover foreign exchange. We're going to cover Forex pairs. The European euro, the Great British pound, the American dollar, the Canadian dollar, the Australian dollar, the New Zealand dollar. Anything else? Japanese yen maybe? The Swiss franc maybe? No, I think we're going to isolate like we've been doing lately, just drilling down on a pair, pip by pip, candle by candle. Cool. With the overriding goal of teaching how to put together trade plans, entering things technically, understanding things fundamentally, taking control of what you do, since you can't control the market. Yeah, maybe a South African rand. We could probably take a look at that. Gold, sure. Oil, sure. Bitcoin. Whatever you want, baby. But like I said, I probably won't go around the world today. Maybe I'll do it quickly. But I do like to focus. Right? You don't want to go looking for 27 different trades when the trades don't exist. So, anyways, so without further ado, we'll get going. Please like, please subscribe, and please leave comments on the recordings. Please like. That's a little thumbs up button. I stink. Okay. And of course, thank you, Traders Way, the sponsor of our community of 14,000 foreign exchange traders all around the world. We come together and they make it possible. So thank Traders Way by visiting their website, tradersway.com. On the right-hand side, there's a little thing that says open a demo account. Click it. I swear to you, 12 seconds later, you're in the back office. It's all beautiful and clean and well organized. You can download MT4 or MT5. You can have an ECN account. You could have a variable spread account. You could have a fixed spread account. Now, I happen to love variable spread, so you might want to choose VAR, but that's up to you. So thank you, tradersway.com. And thank you for the effort and the focus and the attention that you put into learning how to trade properly. And thank you for the respect you show me every day. And thank you for the dignity that you offer to everyone else in the chat. And if you're a spammer, jump off a bridge. We've already had one today waiting for us. Pretty cool, huh? The spammers show up. This guy was like the first guy in the room waiting to spam. It's pretty cool, man. He's like part of his job. Like it's a job description. You got to be there right at the open, man. Hit him hard, hit him fast. Hey, I made so much money with this other money manager. Just a little amazing, huh? What a world. I guess you could look at it. It could be a horror, but this is happening. But maybe it's an honor because they see that you're valuable. What they don't understand is they're in the wrong room. Nobody here is interested in getting rich quick. We're smart, we're intelligent, and we look at Forex as a business. Okay? So maybe the spammer, since I booted him, will go bother the Bitcoin guy with 10,000 people. And every time the Bitcoin guy drops an F-bomb, a spammer will spam. Every time I hear an F-bomb, a spammer hits a spam. So anyways, boom! Reality is just set in. All right, cool. By the way, I want to make sure you understand, it's not just a script or something. I want to thank you for the hard work that you put into this thing called Forex every single day. I get it. It's difficult. I understand you make sacrifices. I understand it's frustrating. I understand you go through periods of exuberance and then dark, bitter pain. But somehow that's part of the human character. And for some reason, we need that. And I think everyone that has become a success has gone through that process too. So, for whatever reason, as you go through these things, you might look into the deep, dark abyss and say, you're doing something wrong. That's couldn't be farther from the truth. You are doing things right. Which template is this? This is just simply daily pivots, daily biased pivots. With and then this I also have on here, so I'll show you. So I also have I have bias pivots and I have my channels on there. So channels is in the complete toolkit, but bias pivots come with the basic toolkit. Okay, cool. So I got my coffee with my quarter stick of butter in it. I hope you're going to join me. So good morning to you too, Maida. How do you set up the daily bias pivots? Well, you could use the template that I give you in the templates. So you could do things like template. How about day trading bullish bias or day trading bearish bias? Okay. Pretty simple. Or you install it and you get something like this. And it says, do you want to be bullish or do you want to be bearish? Simple enough. Cool. But we're not here to talk about indicators because they're all stupid. They're helpful, but they're stupid. You're smart. The indicators are stupid. You have to decide how to use them. That's why I like the bias pivots where you have to decide if you're a bull or bear. If you don't know that, forget it. Doesn't matter. An indicator ain't going to save you. You can't make a decision, then you don't have any value to a customer. Remember, a customer doesn't pay you to trade. A customer pays you to make decisions. Cool. All right. So where did we leave off yesterday? We left off with this as being an exit zone. And we left with this being the general plan for the day. How many people agree with that? Yeah, that's how to do it. You got it perfectly right. That's exactly the idea behind them. Right? Yeah, the wrench, by the way, doesn't repair your car. The hammer doesn't build your house. Sure, nice to have one, but it doesn't do the work for you. Okay? So anyway, so there's the general idea. And now here's what you have to do. You have to decide whether you're still a bull or a bear. Now things are technically different, right? Up, 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 down, down, buy, up, 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 down, down, buy, up, 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 down, down, buy, up, 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 down, down. Now this could have been a buy if you were a front runner. Okay, that's fine. Lower high at London Open. Okay. And then it took it down. So if you stop being a bear or a bull, that's cool. Now the thing is, if you recall yesterday, I said this is where you get out. And if I recall, somebody said, no, I think it's going to go farther. See, I don't think. I don't have to think. There's only the tool, right? My analysis said this was the buy and this was the exit. We said that on Monday. The plan on Tuesday was this is a buy and this is an exit. So there's the plan. It's exit. It's done. You're gone. Cool. Now the next part is what happens next? Well, this is an Asia front run. Many of you don't take those. Then here's your London Open. Well, if you're caught down in here on the London Open, okay, this is very interesting. Okay, what it's showing us is not really enough bulls have taken profit. Now, if you bought down here, well, you just simply move your stop to break even, because you know on the London Open you either get paid or you get out. Easy, right? You either get paid or you don't get paid. Okay. Then you get the bearish engulfing candle, and that's the Okay? That's not supposed to exist in our uptrend. Well, the cool thing is you were out here anyway, so what do you care? Okay? Now, you get the lower high, takes it down again. So if you're a bear, you're thinking lower high, lower low, lower high, lower low, lower high, lower low. The rest of the day, maybe the rest of the week. Who concurs? Who out there is a bear and sees this as the general operating procedure for now? Anybody? Now, Brinsley says today M2 should still be a buy. That means Brinsley is still bullish. So we'll deal with that in a second. Okay? But what you see right now is not bullish, it's bearish. Okay? Okay, a lot of not bears, but agree. So you just inherit market conditions, right? So let's go with those that don't agree or that are not bears but agree to this. Then in this situation, you should temper your enthusiasm for going long and buying this pair. Doesn't mean you walk away and ignore it. No client will pay you money to ignore it. Okay? So, and Mike Sesteo, well, yes and no. Your job is to say you have a bias, you have an opinion, right? So if you're a bull, your bias is up, right? So let's say that. Bias, bull, up. Okay? So what you recognize in the moment, aka momentum, in the moment, it's down. So now you have grown cautious. But you still are paid money by your clients to look for shots. I mean, think of it as a sport. You're a soccer player. Sorry, football. Football. Okay? And you're running around the field. You get the ball. You make some passes. You get into the defense. The defender steals the ball from you, passes it to a wing. And all of a sudden, you're like, uh-oh, well, they got it. Nothing for me to do now. I'll wait till I got the ball. You're like, dude, you got to go get the ball. Right? You got to go get the ball. Nope, we lost possession. Well, we'll just wait. And everybody, can you imagine your whole team just sits down? Well, we don't have the ball anymore. Nothing for me to do. Right? You get the point? You're like, dude, no, you got to go get the ball. You got to defend. Right? So, you were correct. Market conditions are not favorable to your bias. But you know at some point they will be. But you also need to prepare for your job. Okay? And so, I think in the moment we can agree. Yesterday, we said this was a buying opportunity. Right? It's true, right? So, are you sitting down on the field or are you trying to get the ball back? Can you imagine how mad your coach would be? What are you doing? Well, you took the ball, coach. There's nothing more. I'm just going to wait till someone passes it to me. So I'm tired. I think I'll just sit here and I'll wait. I'll wait for a pass. So, no, get the ball back, bro. Okay. So what we said 24 hours ago is that this could, if you're a bull, be an opportunity to get the ball back. Now, here's the funny thing. I told you it was going to do this. Isn't that neat? Isn't that neat? Think of that. Because we were talking about control, right? This is a buy we talked about on Monday. And then I said, if you breach this, the market has gone from you're a bull in a bearish market to you're a bull in a bullish market. Okay. So we got up to that day's target, which clearly means bulls were involved. So then what was the plan on Tuesday? Which we planned on Monday, by the way. Buy at this price, drive it up to this price. Cool. So Tuesday, once again, 3 points, nothing but net. So what did we say yesterday? We're going to have a pretty big down, but hopefully we can drive it back up. So you either still believe in that or you're chasing your tail. And even worse, you might be chasing someone else's tail. Okay? Okay? But none of these indicators matter. You have to have an opinion and you should be able to trade it. One of my Harvard professors yesterday brought up an Emerson quote, because Emerson, of course, is a Harvard man. Let me see if I could just Google this very quickly, because I don't have my lectures in front of me. Ralph Waldo Emerson, principles. So to me, most important here is the principles of trading, not one indicator. Okay? Now, I don't mean principles like some billionaire trying to self-justify his crazy life. But I mean the methodology of you pulling the trigger or the tools you use is one thing. But I'm trying to teach you how to think and prepare the market. Like every day we're talking about tomorrow. I hope you appreciate that, by the way. On Monday, we're talking about Tuesday. On Tuesday, we're talking about Wednesday. Okay? So obviously, your indicators don't think ahead. Obviously, fundamentals lag or are slow to develop. And I'm trying to teach you how to put all this information and think about it as not just a principle of how you do your job or how you live your life, but actually one day to be a principle of a firm, to say, I have gathered the smartest minds around and we've analyzed the deep, big data and we have an opinion. Okay? And that's a principle. So I think I found it here. Okay? Now, I'd like to know what year Emerson did this quote, but let me read the quote. The man who grasps principles can successfully select his own methods. The man who tries methods, ignoring principles, is sure to have trouble. Think of that. If I'm successful as a coach, I will teach you how to understand how the market works, because the market is a group of human beings analyze technical and fundamental data, formulating an opinion, and then executing a strategy. So I'm trying to teach you the principles of how the market works, right? Let me read the quote again. The man who grasps principles can successfully select his own methods. But the man who tries methods ignoring the principles is sure to have trouble. So if you're sitting here like, well, my MACD told me to buy, you've already lost. Because you don't understand. Okay? The quote actually goes on. That's just sort of the Google one. It goes on a little bit. But here's a Harvard man long ago, right? I wish it showed it. But it's over 100 years ago anyways. It's a while, right? The principles I'm teaching you every single day is, I won't say fundamentals because that's kind of misunderstood and sort of a magical name. Macroeconomics, right? And I'm teaching you technical analysis. And I'm right? Psychology. Not like your psych per se, like, I don't feel good about myself. I don't know if I can do this. I'm talking about understanding where bulls and bears would buy. Okay? If you understand these three things, like when I say technical analysis, I don't really care what indicators you use. I really don't care. Okay? Honestly, doesn't really matter because you understand how the market works. So if you are preparing to buy this because you believe bulls are there, who cares what tool you use? Honestly, who cares? You use moving averages? Okay, that'll work, probably on a smaller time frame. You want to use a pivot point? Well, that is a pivot point. You want to use price action? Well, that is price action. If you want to use Fibonacci and you're studying this as a bull, you see, you had to decide whether you're a bull. Otherwise, you don't know which way to draw your fibs. But if you're going to buy it because of 50% retracement, then good for you. It really doesn't matter. What matters is you've decided to be a bull and you're thinking about buying it here. Whether you do or not is tactical. Okay? 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 So go back now to the beginning of June, in which I think on two periods, I taught you how to prepare for and guesstimate where a head and shoulders would form and fall, and where it was likely to be done, the formation, right? And that's where we measured the distance from here to here, extended it from the neckline from here to here, and we were talking about this in this process. I think someone else said the head and shoulders pattern, and I know on a higher time frame it's not really a head and shoulders pattern, so it's not really reversing the market. Remember all of this, guys? But it is a pattern, so if that's true, this lower low, that low lower than that low is going to predict a lower high, so you trade it the same way. It's really a crown pattern. You would take the left shoulder, you would guesstimate there, then it would come up, you would fall, then you'd take the distance from here to the neckline, you extend it from the neckline down, you'd have it here, and there's the likely bottom of that pattern. You guys remember all that? 3 weeks ago. So now if that's true, a bull would think, well, that's going to be an interesting price, which was Monday. Right? Then down Tuesday, down. So there's still a chance for this if you are a bull. Okay? If you're not a bull, and there's lots of reasons to at least be a cautious bull, look where we are, guys. We're just in a range. That's it. That's all it is. So my thought here is if you were a bear and you knew we were in the daily profit zone in which all bulls should exit, does that give you a potential opportunity as a bear? Well, let's analyze that. Let's go into a 15-minute chart and let's take a look. So, by the way, when is the most best time of the day to trade? When do we get the most volume and volatility of trading? What time of the day? What time of the day can you assume the biggest move? The thing that either creates the top of the day or the thing that creates the bottom of the day. And I want specific, don't say open. Okay, what does that mean? London Open. London Open. It either will create the top of the day or it will create the bottom of the day. Okay? Cool. So, let's go back through this. You're a bear, and you see that this has been resistance for a month. Then you see that all bulls should have exited here yesterday. So you say, well, I'm a bear. That could present an opportunity because we are at resistance. Remember, it's been resistance for a month. So you don't have to be a rocket surgeon. You have to make a decision. Now, if you're like, well, Wayne, you didn't tell me to be a bear, well, then you're not listening properly. Okay? Because you're listening for me to tell you what to do. You can do anything you want. Okay? You get paid by customers one day to make decisions. So you see all this and you're like, okay, I'm a bear, and you're wondering where to sell, and you're nervous because it's been up. And you should be nervous. But are you sitting on the grass waiting for someone to pass the ball? Okay? All right. So check this out. Someone asked, how do you use the indicator, the bias pivots, for example? Well, how about this? All you have to do is tell it, hey, stupid indicator, show me the bear sell zone for the day. Okay. Oh, there it is. Okay. What is the #1 best-selling pivot? What is the #1 best? What, if you were a bear and you wanted to sell a pivot, which one would you be begging for? Which one would you be praying for? Which one would you have your eye on like a hawk? Not R2, wrong. Wrong. That's a profit-taking pivot, not an entry. M3, which is, by the way, la 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 la. That is your best selling pivot of the day. But see, yesterday, and you have to listen to my words, that's the best selling pivot of the day. But yesterday you analyzed this market and said, this is, based on your analysis, where bears should get out. So you're like, well, if bears get out, I want to look for opportunities tomorrow around some very key prices. Now, that's your best selling pivot. And you might even drag this across and say, well, that's still resistance, so maybe it double tops and drops. So you're saying, oh, I don't know, right? 113.30 to 113.50-ish, right? And that's your trade plan for the day. You're like, what? What do you mean, Wayne? Yesterday, and I implored you, I believe I actually said that, I implore you to create a plan for tomorrow. I said there's nothing to do today. I hope you remember that and appreciate that. I said you should have planned this bullish trade yesterday. So you show up in New York and you're like, Wayne, what do I do now? Or someone else said it was going to still go up. I'm like, I don't know how you know that. Okay. Oh, what's wrong, Daniel? Okay. So anyways, you see that? So yesterday, right? You should say, well, I'm a bear, so Asia faded up and take it down in London. Lower high, lower low as a follow-on too. Look at the beautiful follow-on. Oh my God. Okay. Yeah, I noticed that. Yeah, send me an email, Daniel. I'll refund the difference for you, okay? No worries, man. I'll take care of you. Email me, though, right now. Okay? Because right now I'm up at 6. I go to bed between midnight and 2. And all that kind of stuff. Okay? I think what happens is you guys put a space in there or something. Wayne at fxbootcamp.com. Okay? Thank you, RJ. Cool. But you guys see what I'm telling you? Like yesterday, I didn't know what today would be. So I didn't preach to you what today would be because I don't know. I don't know what tomorrow's going to be. I don't know. All I've ever taught you was you must decide whether you are a bull or a bear based on long-term technicals or long-term fundamentals that boil down to macroeconomics, or you flip a coin. I don't really care. Okay? They're $5. Okay? So, I don't really care how you come to this idea. You flip a coin and you're a bull or a bear. Now, I'm a bear on the US dollar for the next 3 to 5 years unless something changes. How did I come up with that? You know what? I flipped a coin. Who gives a crap? I made a decision. I'm done. I don't need to think anymore. I'm too pretty to think. You think too much. Wait. Okay? You're too pretty to think this much. Look, you have to make a decision. Stop thinking, start doing something. Make a decision. So if you are a bear on euro dollar, awesome. Congratulations. Over the next 365 days, there will be days and weeks and months in which you will make money. And there will be days, weeks, and months where you don't make money. But at the end of the year, you will have more money than you started with. If you are a bear and all you do is sell downtrends, in fact, you sell rallies and downtrends. If that's all you do between now and the middle of June 2021, 365 days in a row, you wake up and you're like, is this a downtrend? And you're like, no, good. Take the rest of the day off. Then the next day you log in. Is this a downtrend? No, whatever. So, and then you set up the possibilities, right? You don't sit on the ground. You look for places where it would flip. So one of the things I talked about, I think on Monday, was this idea of plan big, but think small. And what we had said is, this is actually a sideways market. Okay? Which means if you're a bear, you have permission to sell at the top. But you have to make that decision. And you're not going to make that decision every day. You made that decision a month ago. Okay? So you have an exit. You're like, oh, that's interesting. You have resistance. You're like, ooh, that's interesting. You have the sell zone of the day. You're like, ooh, that's really interesting. Then you have the big retracement. Then you have a sell-off in London. So let's say you didn't even anticipate this. Like, let's say you kind of anticipated this, but you missed it. Well, you didn't miss this. That's the easy one, right? And now what you're planning for tomorrow as a bear is probably something like this. Okay? So I don't know if that's going to happen, but that's what you would be planning. That's what a bear would be planning if there are bears in the market. Okay? So let me flip this. You're not a bear. You're like, this is profit taking. This is my 3-wave correction, Wayne. Well, great. Here's your plan then. You ready? Up, 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 down, down, buy, up, 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 up. That's your plan for tomorrow if you're a bull. Because remember, the indicators are stupid. The indicators don't have an opinion. The indicators are doing something that you ask them to do. Okay? So if you make a mistake by asking the indicator to measure something by mistake, it's your fault, not the indicator. The indicator is right 100% of the time. So if you're a bull, this is the only thing you have left today. You have to understand that. If you're a bull, this is the only thing you have left, but it's appearing, your opportunity is appearing at the New York Open. Coincidence? I think not. So, if I were me, I would think this. This is either going up or it's not going to. I'm either going to buy this and make money if I get the opportunity. And that's where your technical analysis and price action and all that comes in. But if this goes like this, I'm not interested. I'm done. I might even take the rest of the week off. I'm not interested again until we hit the bottom of the range. I don't buy in the middle. Monkeys buy in the middle. Pigs buy in the middle. What happens to pigs? They get slaughtered. Okay? You're either a bull or you're a bear. Okay? These are angels on my shoulders. Okay? So, the bull right now is saying, whispering in my ear, hey, we're at support. This is going to go up. I'm like, oh, really? So now I might be on this line because I'm at my price. You see, remember what we talked about yesterday? I know my prices, but I don't know the time. How many people get that? I know the price I'm interested in buying. I just don't know the time when it's going to happen. Right? So if I want to buy a house and I'm not willing to pay more than $1 million for the house, it's going to be a problem if the house is 1.6 million. But I know my price. I'm like, I wouldn't pay 1.6. I wouldn't pay 1.5. I wouldn't pay 1.4. You know, I like that house. It's in a decent location. I like the view. The architecture is great. But still, based on my analysis of what a house is worth and how much I'm willing to pay, I'd buy it if it was $1 million. But there's just no way otherwise. So it might come down to $1 million. And if so, I might be very interested in buying it. But I just don't know when, if ever. Right? I'm trying to think. There's a logic to the thought. Yeah, I'd have to look it up. I got some sort of class stuck in my head where there's sort of your willingness and the other party's willingness, and you have to come up to a negotiated agreement, and they have like their lowest price and you have your highest price. And of course, if there's a difference between there, you'll never have a deal unless you can change the variables on their side, right? But whatever. So there's some sort of math. I can't remember it now. But I know I would like to pay, I'd like this to go up before $12.50. So I think that what I want to pay for this is about $112.70. Now, typically that's not at the right price. So $112.70 is, 70 to me is a dead number. It's irrelevant. So I could even let this go to $112.50. Oops. I don't really like that for it to go further, but I could. So there's my price. I'd rather, see, the funny thing is, using the analysis, I'd like it to go up, even though it's sort of a dead number. 1250 is lower. It just, it doesn't quite fit in the technicals now, right? So anyway, so here's what it gets down to. I'm thinking about buying it, okay? And there's so many different ways to do it. But there's my price, right? So you can do it a quick one. Okay? Or, because that's a riskier trade, right? Or you wait for a breach of a higher high. Okay? And now you're in this zone here. Or you wait for, how should I draw this one? You wait for a pattern, like let's say a double bottom. Or you wait for a breach of the 21, which is up to the 55 and down, because now you have a double bottom 1, 2, 3. or. They're all different parts of the different pieces of the same puzzle. But here's the thing, this price that we're looking at now, let me do that in a slightly different color. Okay, this price that we're looking at now, we very, 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 very specifically talked about it 24 hours ago. Okay. So we don't know if it's right. I can't tell you that's a good trade. We do face a lot of risk because we have made a lower low, lower high on a higher time frame. I understand all that. But it either goes up at this price or I'm not willing to trade again for the rest of the day, maybe the rest of the week. Okay. I made that decision yesterday. This is what I keep saying, like, if you don't know that, if you show up in New York and you're like, what's going on, fellas? It's going to be a very difficult experience for you. Yeah, Peter, when I say psych levels, I mean round numbers like 112 and 113. Okay, 111. And then there's big psych levels, which are, oh, that's 11. Then there's big psych levels like 1.10 or 1.00. Those are big psych levels. And then when I say midpoint psych levels, what I mean is like 1.1150, 1.1250, okay, 1.1050, so on and so forth. Okay. Yeah, my pleasure. La 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 la. Okay. Okay. So let me clear all this out. So remember, on Monday we said, right, we recognized this as being the bottom of a range. And you're like, Wayne, what range? You got to go way out. Okay. I think I have to go even farther out to show it. But anyways, okay, look. Okay, there's just stuff going on in here, right? And now we're at the upper bound of this, and then maybe there's a breakout. So that sets you up if you're a bull or a bear. You understand? So here's the logic. On Monday, because you were a bull 3 weeks ago, 4 weeks ago, 5 weeks ago, in particular because of a Fed meeting, then you got 2 weeks where you got pretty mediocre trading, but on Monday you find yourself at support on a weekly 5 EMA, on a daily, and the most important daily entry pivot for a bull. And it's in the first hour of trading. Like, there's so much lined up, you take the shot. So far this week, right now we have a green real body candle. What does the green real body candle tell us? That it's only been up. It's only been up. So if we can breach through all this resistance that you see going back here, we have a pretty good chance to going up to 115. Right? Do you realize we talked about the whole thing on Monday? Okay. Young Wolf, I've been doing YouTube videos for over 12 years. There's 5,000 YouTube videos associated with my work. Most of them are between 1 and 2 hours each. So there may be 10,000 hours of videos on YouTube that are completely free for your education. Right? To get more details than that, you might want to visit the FX Bootcamp YouTube channel, and there's a free little 2-hour, hour-and-a-half training course there. But I think what you should do is pay money and take the training courses at fxbootcamp.com. They're less than $400. Okay? Which means you're paying less than minimum wage. So whatever. So anyways. So we are still only fulfilling, if you're a bull, Monday's plan. Okay? All you're saying is this real body candle will be up here. And then what you're thinking is next week, if you get this, then next week will look like this. And somewhere in between, you're going to get a high wick and a low wick. Which means inside, right? Inside these candles, you are going to find something that looks like this. But both candles will be green, and both candles will carry you to the next level of resistance. It'll only take 10 trading days, which means of the 10 trading days, there'll be some up, there'll be some down, there'll be some up, there'll be some down, there'll be some up. There might be a couple of downs here, and then there'll be an up, 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 and then there'll be up, and then you'll be out. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. No, it might take you a week and a half. 2.5 weeks. Whatever. Okay? So we've already had some up. And then we had a little some down. And now we're, maybe if you're still a bull, are thinking up. Okay? So we have to breach all this resistance, which I drew for you a long time ago. If you can breach this, then bears are weak. We don't know that right now. We're in a battle. So you have an opinion now. If you're a bear and you believe your team is strong, you will take this down. You understand? If you are a bear, you will take this down. They're all bundled together, Petey. Young Wolf, I used to do that a long time ago, but the thing is, I mean, you got to have money because my time is valuable. Right now, my time is more precious than money. So, that's the problem. No, it's usually like 10 grand for 20 days. So 20 hours for 10 grand. So whatever that comes out. That's what I've done in the past. So, but really what I'm looking for is something more interesting than money. But, you know, so I don't know. I'm just, yeah. So I don't know. Email me if you got it. But, yeah. So anyways, yeah. So anyways, let's go back. I lost my train of thought here. You either believe it's coming down and you're doing something, or you're not a bear. That's it. Uh, Degree 360. Are you logging into metatraders.com? And then in the back office, it's empty for you? Really strange. Doesn't seem logical, but the only thing I can think of is you're using the wrong email address. But send me a screenshot, okay? Send me a screenshot of you logged in. Because it's amazing. I get all kinds of emails like, Wayne, I can't log into my FX Bootcamp account. I can't do it. And then you're like, dude, you're not even logging into the right website. What are you... oh, my God. Right? So, send it to me. Okay. Oh, you already did? Okay, thank you. So, I'll try to get that done. Right? I'll do my best. Right now I've spent about 10 minutes with my wife and kids all day yesterday. The rest, so, right? But anyways. Yeah, meta traders. See, that's what I'm worried about. Very often it's stuff like that. Okay. Well, no, they wouldn't be the same though. You have to understand. So I'm assuming you went to MetaTraders, created an account, paid money, and all that kind of stuff, and then you can get in. But you can't use your FX Bootcamp login ID at MetaTraders. They're two different websites. Yeah, and just making sure. It's amazing. People are like, I signed up for the swing trading group, but I can't log into the other sites. Well, no, they're different. So, but anyways. I'll do my best to take care of you, okay? Please be patient with me, but I'll do my best. Thank you, John. I appreciate that. So my goal is, this is quite complicated, but my goal is to make it simple. But I can't simplify it unless I understand it, right? And you know how much effort I put into at least having a belief that I understand this? Okay. But this is why my trading hasn't changed. And like, you guys, you should try this. Go to the FX Bootcamp YouTube channel and find a video from like 2008, 2007, 2006. Open it up and you're like, oh my God, it's exactly the same. Right? Right? You're like, oh my God, it's exactly the same. Okay. Actually, you know what? Here's a shameless plug. I actually need you guys to go here. http://www.youtube.com/fxbootcamp. I think I spelled that right. Please go there and subscribe. I need to get that channel up to 10,000 subscribers. Okay? Because then I can unlock some features, or YouTube unlocks some features, and then we can do some cool things. So visit there and subscribe too if you can. Okay? Like I said, there's like 5,000 videos on that site. And you might find it intriguing, like watching live analysis of the foreign exchange market in 2007. Pip by pip, candle by candle, with the overriding goal of teaching you how to trade. Blah, 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 blah. Frank, there's a day trading course, an updated swing trading course, a taking control course. What else is new? But here's the other thing, Frank. You probably paid $1,000 or more. So right now you can get it for $382, I think it is. So anyways. So there you go, Frank. Hey, Frank, you're welcome. All right. So let's go off the weekly and go off the daily now. And see, like, a weekly trader doesn't see the red candle. It doesn't exist. If you can't see it, it doesn't exist. Out of sight, out of mind, right? Okay. So moving this to, let's make this green. Now you have to look at it from the point of view of a weekly trader. So the plan here this week is this. So I need 5 candles. 1, 2, 3, 4, 5. All right, so here's the week. Okay, and we're going to end up here, probably not, like I said, I don't think we'll get to 15. I think we'll get to 14 this week, and then we'll get to 15 next week. So now I got to take this and make some candles. And so let's do this, okay? So we got our first green candle. Then we got our second green candle. Then we got a red candle. And then if we're right, see, if we're right, if bulls are correct, this support will hold. And we'll get a green candle, okay, tomorrow. And then on Friday, we'll get yet one more. So there's our week. Okay, and we'll get up to this level here. Okay? And now what that draws for us is this is up, a tiny pullback, up, a large pullback, up, a small pullback, and up. And now we just got to our target, which I set for you on Monday. Now, when we're up there, we are forced with new decisions. Because if you're a bull, on a higher time frame, you're going to probably expect and then out. Or you're going to, if you're a bear, of course, you're going to say, well, this is likely to double top. So a bear is going to go, Both, by the way, are valid. Master Trader, yeah, and I noticed you posted a comment on one of the videos with a similar question. All time frames matter. Whether it's daily, weekly, or 1 hour. Oh, why did I say 5? Because that's a week, 5 days in a week. So what I'm saying is to create one, okay, to create one weekly candle. Oops. You're going to need 5 daily candles. But you have to remember from a weekly point of view, right? Well, that's not quite right, but I think you understand what I mean. From a weekly point of view, we've started an upward process. Okay. Okay, so you could drop this into, yeah, so let's see if I can directly answer the question, how the wicks and trading and stuff. So you can see in here, okay, right, you're buying these bottom wicks as a bull because you can only buy low. And then suddenly, if right, suddenly this collapses and now you're out. And then you look at the role reversal, and maybe you buy this or you don't, but there's a slight pullback, and then there's up, and then there's a pullback, and then there's up, then there's a pullback, 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 then there's an up, then there's a pullback, then there's an up, then there's a pullback, then there's an up, then there's a pullback, then there was an up, and then consolidation and all that kind of stuff, right? But do you understand, like, what I'm trying to teach you is in the course of, let's say, day trading. Okay? In the course of day trading, you're supposed to buy these dips. So you're looking for the green candle followed by red on a smaller time frame. And very often it's in something we call the Asia fade. And of course, all of this is taught in the day trading course. I think it's 3 videos. I give you some tools, some bonuses, some downloads. But you live inside these wicks. You trade inside these wicks. You're in before the next green candle, not after. Well, it depends on the setup, but it doesn't matter where your stop is. Okay? Okay, put it this way. So if you're day trading, you could maybe use weekly candles for your stop. Okay? 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 See, the farther away your stop, the smaller your lot size. So it's all the same risk. Okay? But like sort of statistical analysis, you could have 99% chance of not getting stopped out by putting your stop 1,000 pips away. There's a 99% chance that today the market's not going to fall 1,000 pips. And you can maintain your 1,000 pip stop loss until the market changes direction on your smaller time frame, and then you get out irregardless of where your stop is. Okay? So one of the things I like to do is have a stop loss, not to necessarily to protect my trade, because I expect to make money. I hate getting out of trades. Because the only way I get out of a trade is if I'm wrong. Okay? And that should be statistically unlikely. So I don't like getting out of trades, but I get out of trades when I'm wrong. So I need to have my stop far enough away where almost for sure I'm not going to get hit. But if I go into diabetic coma one day, I have stops that will protect from catastrophic failure. I'm protected from a black swan, not because I got unlucky on a Trump tweet. I have to remove luck from the trading. So now maybe you say, well, Wayne, 1,000 pips is ridiculous. Okay, well, but that's like saying, with 1% accuracy, statistically speaking, 99% accuracy sounds good. Well, the problem with 99% accuracy is it's useless. There's a 99% chance the moon isn't going to crash into the world today and end life on Earth. That's pretty good. There's a 99% chance that Atlanta, Georgia, because it's 1,000 miles away from the ocean, will not be hit by a catastrophic tsunami today. You're like, hey, well, that's really important news, right? No. Okay, so what if your stop was 100 pips away? You have to be very, very wrong. If you're, let's say, scalping, you have to be very, very wrong if you are spot trading. Now, you might only be moderately wrong if you're day trading or swing trading. Okay? So now if you're swing trading, you could have a stop that's 150 pips away and a limit that's 300 pips away. And then you're like, oh my God, Wayne, 300 pips, that's huge. No, it's not. We do it all the time. Okay? And then what you'll find is over time, you're like, Wayne, I never get stopped out unless I'm wrong, but then technical analysis tells me when I'm wrong, so I get out of the trade before I lose 150 pips. I'm like, okay, that's really good. So why don't we try something a little more favorable? What if you have a 99 pip stop loss and a 300 pip winner? Okay? Now you can play around with this idea, the 3-to-1 risk reward ratio. So what if you risk 33 pips to make 99 pips? What does the statistics tell you? You can be wrong 66% of the time and not lose money. So now you got to find how good your entries are. See, if your strategy sucks, you're going to fail. I don't care how awesome your technical analysis is. You don't got the right strategy behind it, you're going to suck. Don't worry about it. There is no risk-reward ratio that makes up for sucking. Okay? Now, you get your strategy down right. Now, the thing is, the rest is like the risk-reward for you entering your trade. Cool. If you have math behind you, if you have science behind you, okay, and your strategy's half decent, there's no way you're going to lose 66% of the time if you know what you're doing. You understand? Like, there's just no way. If you have a proper strategy, and by the way, strategy doesn't mean your combination of RSI and MACD. No, that's stupid. Okay? Strategy means you know you're a bull or a bear based on macroeconomic strategy, right? Macroeconomic analysis of fundamental data. So all you have to do is decide, are you a bull or bear? That's all it is. That's all you need to know. See, in a bullish market, when you're a bull, you will make money. In a bearish market, if you're a bear, you will make money. So now you just have to do technical analysis to confirm market conditions. Should you be trading? Yes or no? Good. So at that point, if you're now buying at support as a bull or selling at resistance as a bear, I think it might actually be impossible for you to be wrong 66% of the time. If all you're doing is buying dips in an uptrend or selling rallies in a downtrend, I don't think it's possible for you to be wrong 66% of the time. How many people would agree with that? If all you did was buy dips in an uptrend or sell rallies in a downtrend, it's impossible to be wrong 66% of the time. If that is true, then you can only be profitable. And in the day trading course, we call this one of the universal truths. So if you're not profitable, chances are you're not doing that. And chances are you're not doing that because you don't know if you're a bull or a bear. And what does that mean? Okay, that means you're a pig and pigs get slaughtered. Huh? That's a dead pig. I don't know if I'm a bull or a bear. Okay? Okay? It's just a universal truth. All you need to do is listen to the universe and go with the flow. Use the force, young Jedi, young Padawan. Yeah, that's right, Daniel. That's out of the day trading course, isn't it? 66%, 60% of the time, it works every time. That's all you need to be profitable. Because 66% of the time, if you lose, you won't lose money, right? Think of that. You can afford now to be wrong 2/3 of the time, but I know you can't be wrong 2/3 of the time. And I know even if you're 50-50, like you're buying dips in an uptrend, but you haven't refined your skills enough, so you're wrong half the time. Maybe like someone said, your stops are way too close. You're trading scared because you don't know what you're doing, and that's fine. That makes sense to me. So we'll have to work on that. We'll have to remedy that. But as long as you know, right, you will be successful only buying dips in an uptrend, or that you'll be successful only selling rallies in a downtrend, then all we have to do is get you better at understanding this. Okay? Right? You see? And over, let's say you trade like that, so you're only buying dips in an uptrend, and over the next 3 to 5 years of working on this as your number 1 focus outside of love and life, Do you believe after 3 to 5 years of intense practice that you will improve beyond a 50-50 trader? Bearing in mind that you only buy dips in an uptrend? Do you think you can get better than that? See, at 50-50, you're already profitable. But do you think you can get better than that? See, if you don't believe it, you're not going to do it. So you have to believe it. I'm only asking you for 3 to 5 years of your life. Okay? And if I can get you to 66% winners and 33% losers, and your winners are 99 pips, and your losers are 33 pips, you can do the math, or you should be able to, and calculate lot size and all that kind of stuff, and you'll say, holy schnickerschnockers. That's a wonderful career. Doing something you love, and it pays you too much. Because here's the thing. You get paid in Forex not for your time. That's what poor people get paid, for their time. Lawyers are poor. Why? Because you pay them $300 an hour. Well, a prostitute probably makes $1,000 an hour. What's the difference? If you get paid for your time, you're poor. So if you can develop proper skills and trade your Forex account like a business, and maybe one day start a business and trade other people's money, you might only work an hour a day, 5 hours a day, 5 hours a week, 15 minutes a week. You don't get paid for your time. You get paid to make a decision. Couple of decisions. Is this going to be up in the future? And if so, at what price are you interested in buying it? And you're like, well, this might be an interesting area. And if it falls below that, maybe down here. And if it falls below that, maybe down here. I just planned out the entire week in about 22 seconds. By the way, I want 2% of your entire net worth, and I want 20% of all the profits. But you only work 22 seconds a week. So, you get to keep 80% of the profits. What do you care? Now, obviously, there's more to it than 22 seconds. I'm approaching 22 years under my belt. Well, not really, but what, 17 or 18 or something? But the thing is, you are not paid for your time. You're paid to make decisions. Wayne, everything's in the price. I don't need to know fundamentals. I don't need to understand macroeconomics. I don't need to understand business cycles. I don't need to understand monetary policy. I don't have to watch the news. I don't need to know anything about that. Good. You'll never have a job. You'll never work. You'll never be able to sit down with a customer that has never looked at a chart in their entire life, so they don't believe in any of it. But they do understand money flows around the world for things like business and investing and consumption and trade. They understand that. Okay? And that's all this is. Okay, cool. So, For about, for several months, the world was front running the Fed because of what I explained to you using behavioral finance, and because they were front running the Fed to buy treasuries in a huge rally in bonds. By the way, you have to understand that massive rally in the bond market, ridiculous. Okay, so people made huge amounts of money in the bond market in the last 9 weeks. Then the Fed says, you know what? We're not going to do that anymore. So everyone that was front running the Fed, that trade's dead. It doesn't exist anymore. That's it. Okay. That's it. Sets the basis now for the rest of the future, right? But the thing is, you have to be able to sit down and explain things if you really truly want to be a professional and you want someone to pay you to make decisions. Okay? You can be a psychopath, but at least you're an opinionated psychopath. You can be 100% wrong. Doesn't matter. You're selling something to somebody. You think the dollar's going to do this. So you could sit in front of a client and say, well, all the news in the United States is bad, so the dollar's going to fall. Because bad means down. Well, of course, you're 100% wrong. You couldn't be dumber than that. And then what happens is you will lose clients' money and you'll never start a hedge fund again. But at least you have an opinion and you explained it to somebody, and clients don't, if they knew how to do this, they wouldn't be talking to you. So whatever you explain to them will probably make sense, and they're like, okay, you're a very smart young chap. Here's my money. You have a bad year and you're out. Or you explain the news is bad in the United States and around the world, and the dollar will get strong. And the client says, well, that's interesting. Why does that happen? You're like, well, it has to do with money flow and a risk-off scenario. Basically, money is looking for a safe place to park. So they park it in the safe haven, the only safe haven in the entire world and the largest economy in the entire world, with a trustworthy legal system, a deep bond market, a stable government with a taxable base. And to an Indonesian with $1 billion, they say, you know what? I kind of like those U.S. Treasuries right now. U.S. Treasuries rally, the dollar gets strong, and they're like, oh, that makes sense. And in that case, your sales pitch is just good as the other one, except you're right. You'll make money and they'll reinvest. That's it. But if you can't make the decisions, okay? Got it? I want you to think about making a decision, and I swear to you, if you flip a coin and make a decision based on the coin flip, you will be better off than having not made a decision at all. Please accept my advice. Okay? I humbly present that to you. Having an opinion, no matter how you got it, no matter whether it's right or wrong, having an opinion as the basis of your strategy helps you properly set up and analyze the markets. Okay? If you don't know what you're looking for, you're going to find something. If you're shopping while you're hungry, you're going to buy junk food. You're going to buy crap you don't need. You're going to buy stuff you're allergic to. Okay? See, if you flip a coin and you say between now and the end of the year, the only thing you're doing is buying the US dollar, now you use technical analysis. So what are you looking for? You're looking for conditions in which the euro dollar is falling. And what's the universal truth? You sell rallies in a downtrend. Now, what you don't know is how many downtrends you're going to get between now and the end of the year, nor do I for that matter. But you do know the universal truth. When those conditions prevail, you will make money. And when those market conditions change and go away, you will not lose money. So maybe between now and the end of the year, there's 26 weeks left. Maybe 11 of those weeks, you kill it, you crush it, you make big money. Okay? In 15 weeks, you do nothing. At the end of the year, you'll be better off than you otherwise would have been. The thing you'll have problems dealing with is the 15 weeks where you don't do anything. But you have to remind yourself, before that, you were losing money. So these are 15 weeks you're guaranteed not to lose money. That's a pretty good start. And you're now not guaranteed 11 weeks which you'll make money, but based on statistics and probability, if you know what you're doing, you're probably going to make money. So 11 weeks where you're probably going to make money, 15 weeks where you do pretty much nothing, and at the end of the year, you'll have a stack of cash for your efforts. You'll also have low volatility. You will have a trading history that will be attractive. You will have consistent gains, low volatility, and profitability to show for it. By definition, that will probably make you one of the best foreign exchange traders in the world. The top, the best commodity trading advisors in the United States that focus on macro or Forex, which are kind of the same thing, but they just might trade different asset classes. But it's the basic stuff, the same trends, risk on, risk off kind of thing. The best in the United States, licensed and registered by the Commodity Futures Trading Commission and the National Futures Association. The best. And there might only be like 3 of them. Earn 2% a month. What is that, 32% a year? Okay. Can you do that? You're like, well, Wayne, that's easy. Well, you have to apply some consistency then. Okay? I'm telling you, if you show someone your trading history and it'll look like this, January, February, March, April, May, June, July, August, September, October, November, and December. And you showed them 2021, 2022, 2023, 2024, and 2025. Okay? And this is what it looked like. You ready? 3, 3, 3, 3, 3, 3, 3, 3, 3, 3, 3, 3, and then you add 1 here. Let's go to the black marker here. And then sort of, so year over year, basically, right? Okay, and so you end that with 50%. is roughly what that is. And then in year 2, you have 3, 3, 3, 3, 3, 3, 3, 3, 3, 3, 3, 50%. And then you show 3, 3. You understand this? If you can do this, money will rain out of the sky. Consistent returns with low volatility. Because if you tell a rich person you'll make them rich, they'll laugh at you because it's such a poverty point of view. Rich people don't think that way. You're not even in the right ballpark. They're already rich. What are you talking about? What you're offering is they can exchange their asset. Okay? They can exchange their asset, in this case cash, and exchange it for a cash flow that you can provide. What does that mean? Well, let's say they give you $1 million. Okay? They already have it. They're already rich. What the hell are you talking about? Make them rich. They're already rich. Okay? Cool. So some dude gives you $1 million in cash. By the way, they already own real estate. They already own the stock market, the bond market. They own gold and commodities. They own real estate. They're in some hedge funds. Like, dude, this guy's got all of that, and then he can just throw $1 million of cash at you because he's not using it. And he's got a boat and a yacht, and all. My friend's got 35 exotic cars. You want the Audi A8 or the Ferrari or the Bentley? Which Bentley? Okay, dude, $1 million is nothing. So you can't tell someone like that can just throw play money at you. Oh, here's $1 million. I'll make you rich. Okay, here's what happens. You say to the person with $1 million, give me the $1 million, I put it in an account, and at the end of the year, I'll give you 80% of 500,000. So let's just say that's 400,000. Okay? So here's the thing. Every year, you cut them a check for 400,000. So in year 1, they have 400,000. Year 2, you give them another check, 400,000. Year 3, you give them 400,000. Year 4, you give them 400,000. Year 5, you give them 400,000. And at the end of year 5, you give them $1.4 million back as they exit. Okay? So they put in $1 million, and that at the end of 5 years, okay, they walk away having gained a cash flow and, of course, their money returned for $3.4 million. But on year 1, they bought a Ferrari. On year 2, they went on a vacation around the world. On year 3, it was a down payment on another apartment building. On year 4, but the thing is, they get the $1 million back. And they converted a worthless asset into a cash flow. Now, of course, you can do the time value of money and you reanalyze all of that, right? But the point is, they took something worthless like cash. Cash is worthless. It's nothing. It's ones and zeros on a computer screen or a piece of paper in your wallet. It's worthless unless you convert it into something real. So you're converting it into a cash flow. And if you're saying 3% a month, you are saying 50% a year. You understand? If you can show them that you can actually do that consistently through changing markets over the course of years, money will rain out of the sky. Children will walk and throw petals at your feet. But you have to make a decision if you're going to be that consistent. And what decision? Up or down? And if you make that decision 5 times a day, you'll never be consistent and you'll never raise money. You understand that? You'll never be consistent. You'll never raise money. You'll never hit those big dreams of yours. Now you can keep scalping and do all your stuff, but you're not gonna get there. You're not gonna go big. You're never gonna be big. Okay? Now, if all you said was over the course of 26 weeks, 15 weeks you do nothing except look for opportunities, but you back out, and 11 weeks you make money. At the end of it, you're consistent and you have low volatility. What does all of that mean? You're like, Wayne, I don't understand the consistency and low volatility. Like, why does that matter? Because you're proving to someone you are a cash flow machine. Because when you compete out there in the hedge fund world, when you become a hedge fund manager, they're only going to invest into you if you have a track record of success and they know you. Okay? So what does that mean? You're not competing against other hedge fund managers and stuff because limited partners and all that. I mean, they only know who they know and all that kind of stuff. Your competition is whether your future investor should buy another apartment building with $1 million down payment. So $1 million down, right? And the bank ponies up the rest. And then the cash flows pay for your expenses. There's your net operating income. And then your NOI is going to pay down your financing costs. And at the end of it, right, you have cash flow in your pocket. And then you can calculate that out, right? So you make $4,000 a month for the next 30 years. You can calculate it all out. Is it worth your investment or not? And then you come along and say, you know what? I got a better deal than yet another apartment building. And they're like, oh, really? And you're like, you know that yacht you're going to buy? Well, what if you gave me the money and I provide you the cash flow and you drop $400K on your yacht, but I make the money for you, so now your yacht's free. And they're like, what? Say that again? So you give me $1 million. And every year I will give you a cash flow of $400,000, which will pay for that boat you want to buy. So you can throw away your cash and get a boat, but you know it's going to cost you up the yin yang. There's no worse investment than a boat, and you already know that. So why don't you let me get the boat for you for free? Give me the money. I'll trade it conservatively and disciplined with low volatility and consistent returns like I have been for the last 5 years, and you can have that boat for free. And if you ever decide to withdraw your money, you can have that $1 million back. You just get a free boat, and stick with me and I'll take care of you. Holy schnickerschnocker. What better sales pitch is that? You can throw $1 million at the worst investment on earth, and we all know a yacht is the worst way to spend your money ever. You might as well just burn it or throw it into the bottom of the ocean. Or believe in me, and I'll get you that boat for free. Easiest sales pitch on the planet if you can back it up with that trade record. So my advice to you starting today is do whatever it takes to achieve that consistency with low volatility. Don't focus on making as much money as you possibly can by getting in every trade, and you're long and you're short and you're short and you're long, long-term, short-term, scalp, swing, spot, blah, blah. You're just all over the place like a wild animal. And instead say, my job is to provide a consistent cash flow for wealthy investors. And if you can achieve something that proves you can do it, money will rain out of the sky. People won't believe it at first. They'll say, that can't be true. I'm like, oh, check it out. I'll give you the data, all my trades. I'll let you log right into the account if you want. Pull your numbers, bring out your due diligence team, bring out your accountants. Let's go through it. Bring out your quants. Go through all my data. And then let me know when you want to invest and how much. By the way, my minimum is $3 million. Okay. So anyways, trying to expand your mind, guys. Trying to expand your mind. We're in a time of low volatility and low volume. So I'm trying to get you to look for the better trades, to be more patient, more conservative. And the best thing to do in times when you kind of feel like you're supposed to be pulling the trigger or doing something, you should probably be thinking of the long term, the greater good, your future you, not just the in the moment you. Okay? Right? A child, when given the opportunity, you can have a cookie today or 5 cookies tomorrow. What do they do? Okay? A child says 1 cookie today, or you offer them, they can have 5 cookies tomorrow. What does a child do? If you gave them a choice. No, you put a cookie right on the table in front of them. You can have this cookie right now, or if you wait until tomorrow, I will give you 5 cookies. What does a child do? What is the decision? It's well documented, guys. Well documented. They take the cookie. Is that what you're doing with Forex? You're so focused on the 1 cookie today, how quickly you can make your yellow Lamborghini, and you're throwing away the 5 cookie deal. It takes patience, it takes discipline. So don't trade like a child. There's lots of YouTube gurus out there trying to teach you the childish way, the quick way, the fast way, the sexy way. This is a long-term job and career that takes real skill, real sacrifice, and 30 years from now will still require real skill, real sacrifice. But I think you'll be happy where you are in life. And you'll enjoy what you're doing. Agreed? See you tomorrow.